You'll never guess what I did, guys. I shaved my mustache. I know, crazy, right? But welcome back to my channel. My name is David Hanlon, aka the Laptop Legend, and today I made $620 shorting. I was up about $800 in the first 20 minutes of the day and then gave back 180 bucks throughout the rest of the day, just in the choppiness. Very frustrating day overall, but I had some lessons that I really wanted to give you guys because there were some crazy charts today that if you take these lessons away, I think it could save you guys easily 5 figures in the future, and I would rather have you learn from watching this video than learn from losing 5 figures on your own. So please watch this video, take these lessons to heart, and use them to become a better trader in the future. That's my goal with this channel. Also, later on in the video, I'm gonna mention some stocks that I am planning on trading tomorrow, but overall, I think the purpose of this video is to be one that you guys can watch, months down the road, years down the road, and still benefit from it. I don't want it to be one of those, just one and done videos. So hopefully you find it helpful. If you do, please smash the like button, subscribe if you haven't already, turn on post notifications, drop a comment saying rip David's mustache or something like that. Rest in peace. Rip in peace. That could be a good one. And yeah, let's dive into my computer. All right, guys, so this is the chart of the day. EEENF, and this is one that that really hurts for a lot of people because this thing had the most insane gap down I have ever seen in my life for a stock that wasn't halted for weeks. I mean, COUV, if we go back to that one, this one gapped down, I mean, more, definitely gapped down more. Gapped down from 80, 84 down to 2. That's probably the most insane gap down I've ever seen, but that got halted for 2 weeks by the SEC. So barring something like that, this is the most insane one-day gap down I have ever seen. This thing closed at 85-ish, 84, and it gapped down like 80%, man. It gapped down like 80% overnight. And this thing is just a testament to why you guys need to lock in gains when you're up big unrealized. And you don't have to lock in all the gains, but I really want to emphasize this because we had some guys in our Discord. I'm not going to name any names, but I'm sure there's some of you guys who were not in the Discord but who are watchers, viewers of this channel, who a similar thing happened to. You were in this stock and maybe you had a pretty good entry, man. I can go back a few days here. Maybe you got in here, man. Maybe you got in at 4 cents. You got in at 3 cents, and you're thinking, damn, it's up at 8.5 cents. I'm chilling. But I hear a lot of hype about this thing. They're about to discover 10 billion gallons of oil and turn into a super big company. They're about to discover all this oil and be worth a ton of money. And then you don't sell any, even though you're up over 100% in your position. And overnight, the stock loses 80% of its value, and suddenly, instead of being up 5 figures unrealized, now you're down 5 figures unrealized, which is absolutely unacceptable if you want to be, if you want to be in this game for the long term. And this is one of those things where like patience pays. It definitely pays. If I'd gotten in at 2 cents, I don't know if I would have held past 4 or 5 cents. I really don't. And there were people who got in here and then still had their entire position up here. But it really hurts me to see you guys not sell any when you're up big. And this is why partial selling is such a good idea. Because when you're at the peak of your, I'm trying to think of the word, your hysteria, when you're so entirely convinced that the stock has a ridiculous amount of upside and, not very much downside, that is probably a good sign that you need to be taking some gains, especially if you are up unrealized over 100%. And that was a rule that I made for myself. I made a rule that if I was ever up on a swing position over 100%, I would at least lock some in to make sure that if it ever came back down, I would at least have sold some near the top. Because that's the thing about locking in gains, right? So if say you're in from 2 cents and you sell some at 8.50, say you sell a third of your position, then it goes on to run to 20 cents. Okay, that would stink to have sold some here, but you still lock some in. Because if you buy here and you sell a third here and suddenly it's down here, that third that you sold up here is now worth more than your entire remaining position. And if you can lock in some when you're up a ton, that allows you to dip buy when stocks dip back down. And I'm going to give you guys the example that I gave the Discord. If you're in the Discord, I apologize. But MITI, this is one that I had that same issue with. I learned this lesson very well on this stock. So I can zoom in a little bit here, just so you guys can see it a little bit more. So this thing, it ran from, 2 cents, obviously. And I got in right here. This was the day I got in, around 10 cents. And it immediately rips all the way up to 25 cents. And I have 100,000 shares, so I'm up 5 figures unrealized. And there's no news, there's nothing. It's already up from 2 cents. I got in at 10 cents and it ran to 25 cents, still with no news. Yet I was just convinced this thing was just going to keep going and keep going and keep going and keep going with no pullbacks. And because of that, I sold absolutely none, to lock in some gains. And then it had a really big pullback. And it pulled all the way back down to 11.5 cents, I believe. And I ended up panic selling, like 2/3 of my position at 12. And then it went to bounce from 12 all the way up to 60. And the moral of the story is, if I had locked in half of my position that I had from 10 at 25, I already would have been riding free on my shares. Because the profit that I locked in already would be more than the initial cost basis of the shares from down here. Which means that when the stock dips, I would have been able to buy a lot more down here, had a lot more shares, and then made so much money on this rip up here. But because I did not lock in any gains, I put myself in a really ugly position psychologically. And I think a lot of you guys did that same thing on EEENF. And it's not about thinking that the stock can't go further. That's not what you're saying by locking in your gains. By locking in gains, you're saying, I am doing myself a favor in the future in case this thing falls, because I do not want to put myself in the psychological position where I was up 5 figures unrealized and now I gave them all back, or maybe I'm even negative. That is a horrible feeling, and I never want any of you guys to experience that. And maybe you experience that on this, maybe you experience it on other plays, but when stocks run multiple hundreds of % without a big pullback, they usually see a pullback. And it's usually a good idea to sell some. Even if you think it's going higher, lock some in. If it goes even higher, you can lock some more in until eventually it reaches a point where you're like, all right, I need to sell all of this and I'll buy more on a dip. Or you're just saying, all right, I'm going to hold this bit no matter what, even if it does dip. And then you can add more on a dip. But in this case, if you had locked in half up here, when it came down and started spiking, you probably could have gotten in pretty big here. And it had a nice little bounce here. But I just feel like this thing created so many bag holders, man. So that's the main takeaway that I just want to give you guys from this one. Please lock in gains. Learn to partial sell. Learn to partially lock in gains. I do it all the time on pretty much every single trade, and it has saved me so many times. If you're going for a home run every single trade, you're going to end up giving back so many gains and just ruining yourself psychologically, because there's literally no worse feeling than being up huge on a trade and having it turn negative. There's no worse feeling. No worse feeling. So just please do that in the future, guys. So now I want to talk a little bit about a couple shorting strategies that I was using today. So my best trade of the day, the one where I made $800 in the first 20 minutes of the day, was MOXC. And I wanted to show you guys this one because this is a classic shorting pattern. What you want to do is you look for these charts where you get several green days in a row. Several green days in a row, okay? So you look for this, and this thing was up. I guess that's kind of zoomed in now. It looks weird. All right, let me zoom out some more. Let me go right here. So you guys can see this thing is up. MOXC was up from 272 all the way. It hit a high of 738 with no red candles whatsoever. And that was 1, 2, 3, 4, 5. So that was 5 green candles in a row. And this day started off and it had a green candle. So you can see that candle goes above the close here. So I mean, this candle started off green. But once it goes red, that means it's the first red day on an overextended chart. And the first red day on an overextended chart is a very, very high probability of success for shorting. And there's 2 ways that you can do this. Now, I could have made a lot more money if I'd been a little bit more aggressive, but I was not more aggressive, and I didn't make as much money as I could have. But here's the thing. Here's what you want to do. So typically speaking, there's two places that you can risk off of. You can risk off of the high from the run, the previous run. So whether that is here at 7.4, you can risk making a new high if I were shorting in this area, or you can risk, pre-market highs if you want to count that. That would be the main risk areas from the high from the run, the overextended run. 5 green days in a row. I'm risking off the high, so if it makes another high, that's a good point to cover my short and whatever. But the other place that you want to risk off of is typically lower than that, and that is the red-green area. And in this case, that's right where the stock closed the previous day. I guess that's always what it is, and that was at 6.8. So that's what I did on this stock, and I ended up shorting. Actually, let me pull up my exact entries for you guys. Where was that? Let's see. Yeah, so I started shorting up in here. So my first entry was I shorted 500 at 653 right after it went red. And it actually dumped pretty hard after it went from 680. And again, my risk was red-green on this. So I was shorting here at 653, risking it going back green on the day. And it kept tanking. And it tried to bounce here. And I ended up re-shorting into this bounce. I added 500 at 624 into this bounce, and then it sold off some more. And I started covering down at the bottom, and I covered most of it down in this area. I should have been probably a little more aggressive, re-shorting into this bounce and letting it fade off a little bit more. But, it was overall a really good trade. And this is one of those short setups that you guys want to look for. This is absolutely classic, and I actually didn't call this out in yesterday's video because this one was not on my radar. So this is the type of thing that you can scan for, and you can look for multiple green days in a row and basically see charts that are getting overextended like this. Because if it runs like this, there's a good chance that the first red day, once it goes red, if you can short right there and risk off the high or risk off of the red-green level, that's a pretty good short. It's pretty high odds. So I really like that strategy. And I will continue to do that in the future. And I think something I want to say about shorting is you guys cannot short front side of a move just trying to catch the top. It's just as bad, if not worse, as trying to catch the bottom of a stock that keeps tanking with no bottom in sight. It's just as bad. So the safer thing to do is to wait for a stock to get overextended or to short into a stock that is running into major resistance. And I have some examples of that. At least I had some examples of that. I'm not sure if I still have. Yeah. So let me actually talk about this one. So GLSI, this, if you recall, if you've been watching my videos for a while, this is a former insane supernova. This thing, the intraday chart for this thing is absolutely nuts. And this thing went so insane. It went from $4 to $158 the next day. This is probably the most insane supernova, maybe of all time. Maybe I'm missing some, but this one had several green days in a row, and it was getting pretty overextended. I'm trying to look where I can show you guys. It's kind of tough. Maybe right here. All right. Well, that's gonna have to do. So it's had a nice little run from 28 all the way up here, and if you see on the intraday chart, this 52.98 level right here, it rejected, so pretty much 53. It rejected off of 53 multiple times intraday right here. So this was an area that I was shorting into, actually. And that's typically, a good thing to do. It's typically good to short into resistance when you can see it on the daily chart. You can see that there's resistance here, and intraday, there's resistance. Now, what's bad about this chart is the fact that it kept making higher lows and kept holding this uptrend pretty much throughout this entire time. That was a good sign that when it actually broke out here, I needed to cut, and I did. Now, unfortunately, I started taking stabs at shorting. I re-shorted here in this area, and I think I covered some here, and then I re-shorted here, risking on the break of this high. That was pretty silly. And I ended up covering here right before it had a major dump and then went into a beautiful downtrend all day long, and I missed out on, $10 a share, which is very frustrating. So I definitely still need to work on my shorting habits, but again, another thing you want to do is shorting into these resistance levels. And that actually brings me to a stock that I think you guys should watch for tomorrow. But this is another really good example of when you should short into resistance levels and how you should know that you should not keep shorting. And this stock right here, RMO, if I go and look at 10 days, 30 minutes, you can see there's a lot of resistance here between, I would say, this 10 area and the 11 area. Right here, a lot of consolidation. Right here, a lot of consolidation. And then there's actually some right here. And these would all be good areas to short into. And I couldn't get shares of this on Schwab, but I would have been shorting right in this area. I would have been shorting right in here, as it spikes up from 7.7 all the way up into this resistance at 10.4. And the fact that it kept ripping through that is a good sign that you should be cutting your losses. And taking partial gains, actually, this is another good lesson right here. Taking partial gains is one of the reasons that you can get out profitable even on a stock that's still squeezing. So if I shorted into that resistance here, shorting at 10.4, and I cover half when it breaks under 10, and then it comes back up, I can add here, cover some more here, and still be profitable overall. Even if it keeps squeezing. Now, this is a good example of a stock that has incredible strength, and you don't want to be trying to catch the top of this. If you keep trying to short and guess where the top is, you're going to keep shorting and keep going more and more negative, because this had incredible strength. It held the uptrend pretty much all day long, only finally cracked towards the end right here. Now, this stock is holding its gains great, and I wouldn't be surprised to see this continue to run tomorrow. But it's just a very interesting chart, and I wanted to put on your guys' radar. The other one that I shorted today, I guess there were a couple more that I shorted today. I wanted to show you guys this one right here, UCTT. This is another good example of where you could put a stop order. And I actually haven't talked about that, but you can have a stop loss, except it's not a stop loss, it's a stop short, if that makes sense. So if a certain price is triggered, you can short. And I actually did that on this chart right here, and it was absolutely beautiful. And then I ended up giving back my gains here because I'm still new with this, but pretty cool trade. So you can see here, this support level was right here, and it bounced. So when this failed, I put a stop. Right as it was coming down here, I put a stop short right here. The low here is 57.55, and I put a short. I said, if it prints 57.54, I want to short 100 shares market. And so I did. I got in at 57.52, and then I got in for that beautiful red candle and ended up covering down here in the 56s. So absolutely beautiful trade. You can do that on the intraday chart. Find where the support and resistance is, and if it breaks that key support level, feel free to put a stop there just so you can avoid missing it. And you can do that on the red-green level on a stock like MOXC too. If I had done that, I would have gotten a better entry. If I'd put a stop short right at 579 or something like that, waiting for it to go red on the day, I could have easily gotten bigger size at a better entry. So keep that in mind, guys. This was a beautiful trade. Beautiful trade. So that's pretty much it on that one. The last one, this is just one of those stocks that this one gapped up, halted for a while, reopened here, and then couldn't even come close to breaking above that high there. So I got short here because I figured it was going to break down under VWAP and see a massive crack. And I was only short 200 shares, but it was still kind of nice. I butchered the cover, but still, being in for that crack is pretty nice. And then it faded off all day long. So these are the types of stocks that you want to be shorting, guys. And shorting is a valuable skill that you do want to learn. BTX, this is one that I was talking about yesterday because it spiked up in after hours. And you can see this is one of those classic all-day faders. So this one was unable to hold the lows here from pre-market. So I would have probably attempted, if I were feeling a little more daring on NASDAQs going long, I probably would have attempted to dip by it here around this area. But when it broke 7, that's a really good sign. This chart is just gross and is going to fade off all day long. So, would have been a beautiful short. There were also no shares of this. But this is a classic fader, guys. A classic fader. And there's a lot of opportunity on the short side in slow markets like this. So you definitely want to keep your eyes open for that. I'm trying to think if there's any stocks tomorrow you need to be watching. I would say definitely be watching RMO because it is holding those gains really well. Again, be watching this because it's holding those gains really well. ISIG, this is one that spiked up in after hours, but it looks like it just cracked VWAP pretty hard. So I'm not sure what this one's going to be doing. I guess it's still on watch. you know, potentially for short. I'm not sure if there's shares of this, only a 1 million share float, so I'd be surprised if I could get shares of this. But again, same thing, you know, if it can hold pre-market lows and then start ripping, this is the type of thing you can dip by and risk off of those lows from pre-market, and it's pretty decent risk reward on a 1 mil float because this can squeeze pretty dang hard. So that's pretty much it. Yeah, hopefully you found this video helpful, guys. If you made it to the end, I don't have any creepy mustaches for you, creepy mustache faces. I can't think of anything that cool. Just, yeah, remember to lock in your gains. If you made it to the end, comment, I promise to lock in some gains. That's what I want you to do. And that's it for this video, guys. I will see you in the next one. Until then, you know the drill. Let's grow better together. Preguntar, bebé, dime por qué te mientes. No puedes esconder todo lo que tú por mí sientes.